Welcome to Pyrocryptic News. Our headline today, XRP eyes $19 trillion real-world asset opportunity.
That's right, a huge potential market.
We're looking at a concise update for XRP investors, focusing on XRP's possible role in tokenizing real-world assets, RWAs, as they're often called.
And the numbers being talked about are pretty staggering.
Yeah, there's this report from Ripple and Boston Consulting Group suggesting, a $19 trillion market for this by 2033?
That's the figure, $19 trillion. It's ambitious, definitely.
Especially when you compare it to, the estimate for right now, or 2025, is around $600 billion in tokenized assets.
Right, so $600 billion now, aiming for $19 trillion within, less than a decade.
That's massive growth potential we're talking about.
It really is.
Yeah.
And it suggests a fundamental change, maybe, in how we handle value, how we trade assets.
So things like property, commodities.
Exactly. Real estate, art, collectibles, you name it. Bringing these tangible things onto a blockchain.
And it's not just the size of the market, is it? It's also about why this might happen. What's driving it?
Well, a big part of it seems to be efficiency.
Okay, so tokenization itself, that means turning ownership rights into digital tokens on a blockchain, right? Makes them easier to track, easier to trade.
Precisely. You could represent, say, a piece of a building as a token.
And real-world assets are just physical stuff you can touch, generally.
Correct. So the idea is taking something like your house, or maybe a share in a commercial property, representing it digitally.
And then trading that digital token potentially much faster and maybe cheaper than today.
That's the core appeal, especially for institutions. Think about all the paperwork, the lawyers, the time it takes to transfer ownership of, say, a large asset right now.
Yeah, it can be incredibly complex, lots of steps, a lot of intermediaries.
Tokenization offers a way to streamline a lot of that, cut down the friction, speed up settlement, maybe lower the fees.
Okay, and here's something that really jumped out from the report. The XRP Ledger isn't just being discussed as a future platform for this.
It's already in use.
Yeah, apparently over $1 trillion worth of these tokenized real-world assets have already sort of moved across the XRP Ledger.
That's a significant figure, over $1 trillion. It suggests there's already some real activity happening.
It does, and we're seeing concrete examples like U.S. Treasuries being tokenized and traded on-chain.
Right, that shows there's a real appetite for this, and that the infrastructure, at least on the XRP Ledger, is already handling it.
That existing use, that traction, seems like a key point for XRP, doesn't it?
Absolutely. It's not just theory. There's actual activity, institutions trusting the platform for these high-value transfers.
Gives them a bit of a head start, maybe.
It certainly provides a proof point. It makes you wonder why those early movers chose the XRP Ledger specifically.
Yeah, good question. Was it the speed, the cost, something else about the ledger itself?
Could be a combination of factors. Transaction speed and low cost are often cited as strengths.
And the report links this back to XRP, the actual digital asset. It's used to process these transactions on the ledger.
That's its native function.
So the thinking goes, if you get way more tokenized asset trading happening,
then you'd need more XRP to facilitate all those transactions.
Right. Which could potentially increase demand for XRP. Seems like a direct line for holders to see a benefit.
That potential for demand growth is definitely what many investors are watching. But it's important to be clear, like the report points out, the total value of assets tokenized on the ledger doesn't automatically mean XRP's price goes up by the same amount.
Right, it's not a direct market cap translation.
No, it's more about the utility of XRP increasing, the demand for its function within that growing ecosystem. That's what could create, upward pressure on the price over time.
It's about the network being used more.
Exactly. Network usage is key.
The report also brought up the idea of a network effect, which makes intuitive sense.
Yeah, the more activity on a platform, the better it becomes for everyone using it.
So more assets traded means more buyers and sellers, which means it's easier to trade, better prices, liquidity, right?
Correct. Better liquidity, tighter spreads, more efficient price discovery. It becomes a more attractive place to trade.
And that could draw in even more activity, creating this positive feedback loop.
Precisely. If the XRP Ledger becomes a major hub for RWA tokenization, that deep liquidity could be a huge competitive advantage. A real moat, perhaps.
Makes it harder for others to catch up.
Potentially, yes. It could build a significant barrier to entry.
Okay, but let's keep it balanced. The report also warns this isn't like a sure thing.
No, definitely not. It's still early days for RWA tokenization overall.
And XRP has competition. It mentions specialist platforms that might pop up.
Right. Platforms focused only on tokenization might be able to build very specific, tailored solutions for certain asset managers faster than XRP, which has broader uses.
So XRP needs to keep proving its value across different types of assets.
It needs to stay competitive, innovate, and show why its platform is the better choice. Yeah. Adaptability will be important.
And then there's the big one, the financial institutions themselves, the banks, the asset managers.
The potential users.
What if they just decide to build their own systems, their own private blockchains for this stuff?
That's a very real possibility. They have the resources, the regulatory know-how. They could definitely create their own walled gardens, so to speak.
So why would they use XRP Ledger instead?
Well, XRP would need to offer clear benefits. Maybe it's significantly cheaper, or maybe it offers better connections, interoperability between different systems, or perhaps that network effect we talked about becomes too strong to ignore.
So it needs to be compelling enough for them not to want to build it themselves.
Exactly. Ongoing adoption and feature development are crucial to maintain that edge.
And finally, the report made that important point again about the link, or lack thereof, between the value of assets on the ledger and XRP's own price.
Yes, worth reiterating. Trillions in tokenized assets doesn't directly equal trillions added to XRP's market cap.
It's not one-to-one.
Not at all. The value proposition for XRP here is its utility in processing those transactions and the overall confidence in the ledger as a secure, efficient platform for this new wave of digital assets.
So the price is driven by broader things, market sentiment, overall adoption, its actual use within the network.
Correct. Increased activity is a positive sign, a bullish indicator perhaps, but it's not the same as the value of the assets being tracked.
Still, the report seemed to end on a positive note for XRP holders, saying that growing confidence in its tokenization platform is a significant bullish driver.
Yes, as long as the ledger keeps meeting the needs of this evolving market, the trend of adoption for RWAs is certainly one to watch.
So, wrapping up, huge potential in this $19 trillion RWA market by 2033. XRP has a head start with over $1 trillion already moved on its ledger.
Which could boost demand for XRP itself.
But there's competition from specialists and maybe even the big institutions building their own solutions.
Right, and the value link isn't direct.
But increasing confidence in XRP for tokenization is seen as a positive.
Definitely. It really positions XRP in the middle of this convergence between traditional finance and blockchain.
Which leaves us with a final thought, maybe for our listeners.
Yeah, think about this. As more traditional assets, homes, stocks, bonds, art, move on to blockchains like the XRP Ledger, what does that mean for the wider financial world?
How does it change things like access to investments, transparency, just the basic idea of owning and trading things?
It's a fascinating space to watch develop, and XRP's potential role in it is certainly a key part of that story.